Hello everyone, and welcome back to this 2021 series of the NZX retail webinar. We hope everyone had a pleasant break and everyone is keeping safe and well given current lockdowns, etc. My name's James Sharp. I'm Senior Relationship Manager at NZX and will be introducing our speakers to you this afternoon. Before we get started, as ever, just a couple of points of housekeeping. We do highlight that this is a Q&A interactive session, so to ask a question, please do so via the question panel in the webinar window. And secondly, there may be a few seconds pause between presentations, just bear with us on that as well. But without further ado, let's get started. So first of all, I'd like to introduce John Kippenberger from Scott Technology. So Scott Technology, for those unfamiliar, is a high-tech engineering company specializing in the design and build of automated systems for manufacturers and processors globally. Over to you, John. We'll be back in a few minutes with some questions. Thanks.
Thanks, James. And good afternoon, everyone. Really a great pleasure to be able to talk to you today. And despite appearances, a couple of bandages, I'm really well. So it is exciting to be talking to you about Scott Technologies. Just in terms of my background, I've been in Scott for just over a year now. So joined late November last year in 2019. Prior to that, I've CEO and MD roles of a range of different sort of companies, mainly either branded consumer goods or business to business, and they've all had some form of global element, usually in terms of operations across Australasia, but pushing up into Asia and into Europe. I'd like to talk to you today just about 3 points. One is, the first one is about who we are and what some of our background and what we look like. The second point is about the Scott 2025 strategy, which was a big strategy reset that we went through last year, and then close on the growth opportunities that we see going forward for Scott. So as James said, Scott's a global automation and robotics company. We deal with some specific sectors that we'll touch on in a moment. And we've got a really rich history originating out of Dunedin, which is still our head office down south, but really now a vast global footprint. And that involves also dealing with some very large companies around the world, which I'll also share with you. Just in terms of our history, if you look, we're going to look on the left side of this page and then across to the right side, but you can see we're over 100 years old. So, fascinating and long history through the wars and so forth. But if you look at the right-hand side of this chart, you can see a lot of acquisition activity, particularly in the recent 5, 6, 7 years, and in particular 2015. Scott bought into Australia. They had an existing Aussie business, but it was relatively small back then, so they bought a bigger business. Then they acquired a business in Europe, slightly different technology and focus, and then a business in America also in 2018. So a lot of acquisition, and I guess one of my key responsibilities has been setting the strategy to make these acquisitions work, to refresh who are we, what's our core capability, and where do we deploy that across our global markets. So in terms of what we look like globally, it is a global business. It's not an export business. We've got factories in Europe, so our head office in Europe is in Belgium, and 2 large facilities in the Czech Republic. I was fortunate to get to Europe to see the team in operations there before lockdown commenced last year. In Asia, we've got a factory on the east coast of China, very exciting prospects, particularly in the appliance and white goods sector playing out in China, so good prospects for that business. In Australia, our main facilities are in Melbourne and Sydney, and then service centres in other parts of the country. New Zealand, we're really from Auckland all the way down Wellington, Christchurch, and then our head office, as I said, in Dunedin. And then our operations in North America are Charlotte Charlotte, North Carolina, and Marion, Ohio. So lots of factories, and of the sort of 600 people that we've got in Scott, less than a couple of hundred of those are in New Zealand. So really, pretty dynamic and interesting footprint around the world. And just looking at that a little bit further, this really amplifies this issue about the global nature of the business. Revenue, small amount of revenue coming out of the New Zealand market. There is further opportunity for us in New Zealand, which I'll touch on, but really our main markets are Australia, particularly in mining and meat in Australia, America and Europe, both of those markets with opportunities as well. And like I say, we're excited about the future potential for China. In terms of our focus areas, we've got our main revenue splits are meat, mining and appliances. We call these sort of vertical sectors. They are meat processing, which is looking at visual systems and X-ray systems to define cutting lines, primarily of lamb plants, and then with big automation systems to complete the cutting part of that process. Mining is typically products used in crushing rocks into sample preparation for the laboratories of the big mining companies. And appliances is really producing big manufacturing lines for the white goods companies that actually produce insides of dishwashers and washing machines and the like. Industrial automation and material handling logistics are two technology platforms that sort of span across those other sector verticals. And for example, material handling and logistics is really the big warehouse systems that you might have seen in pictures or videos of companies around the world that moving to these dark warehouses that don't involve people. Cartons are coming off production line and moving down into these fully automated warehousing, stacking, retrieval systems, palletizing, and so forth. So that's a real mix of the business today. A little bit in terms of the financial history, you can see revenue growing through 17, 18, a bit of a pull-through effect in the FY19 of those earlier acquisitions. The base business has been growing along that time as well. Obviously, there's a big ugly bar on one of these charts, and that's the decline in FY20. And we certainly had a number of projects that were stopped during FY20 because of COVID, so we couldn't get access to customer sites as companies around the world shut their entry, not just country borders, but actually shut entry to manufacturing facilities to prevent COVID risk. But also we took the opportunity under the strategy review to take some risk off the balance sheet that we didn't think was aligned to the future direction of the business. So really clean, solid base to go forward on from here. In terms of the organisations we work with, these are just a few examples of recent partnerships. So I think the thing, whatever names you're familiar with, and you'll be familiar with a lot of them, I think the message from this slide is we're dealing in the main with very large multinational companies. All of these companies have large numbers of facilities. They're not dealing with one or two factories. They're dealing with several factories, often in America, factories in Europe as well, particularly in appliances. Companies like Silver Fern Farms and Alliance are obviously New Zealand operations, but again, they've got multiple facilities, and just like the likes of Rio Tinto and BHP, numerous mines around the world. So the big push for our strategy from here is to form long, enduring and successful partnerships with these big customers, where we're not just looking at solving one issue in one facility. We're building technology solutions for them that we want to roll out across multiple facilities. And that's a big issue because a lot of these big projects, there is design risk So it's about how do we identify that design risk, how do we share the pricing and upfront with the customer, but also how do we ensure that we're building technology platforms for multiple rollouts rather than just one facility. And the last point on this intro piece is really just, this is picture tells 1,000 words. We've got great videos for this company, but you can't use them on this system, but this webinar. But if you look further down this towards the back end of this line, we build this whole line. These are about 30 to 40 meter lines, and they put a sheet of stainless steel in one end, and about 12 to 13 seconds later, out comes, in this case, a fully formed, cut, molded washing cabinet. And that's typical of what we build. We build highly complex, big engineering solutions that give output at tremendous speed and very high precision, which is what all our customers are looking for. So just to cut on to the strategy. So as I said, with me coming on board a year ago now, it was the opportunity to really look at the strategy and say, where have we come from? Lots of acquisitions, lots of other activity, but most importantly, what does the next 5 years look like? And really, we've identified 5 key strategic foundations, I guess, to our growth. And as I mentioned before, authentic customer partnerships, big relationships, identifying risk, pricing that or sharing that somehow, and certainly working with long-term solutions across multiple facilities with customers. Leading edge technology is about bringing through more of our service and product business. So whilst the business in the past has been upwards of 70% of revenue generated from projects, which, as I've mentioned, can involve some design risk, and we've seen this play out at Scott. What we want to do is we want to bring through strongly the service part of our business and the product and parts components of our business. So we really want to go from sort of 70% systems, continuing to grow that, but at the same time really lifting these other components, which are ongoing. They provide good cash flow, they provide important customer intimacy, because on service contracts you are in plants talking with operators and management all the time, and they're good margins in terms of service and product businesses. One global team is about bringing together the cultures of all the recent acquisitions. So when you see a Scott engineer or operator, you know what they stand for. And when we have a team culture, operational excellence is about safety. It's certainly looking after our people, but also it's about making sure that we've got really strong disciplines and controls around project management, because a lot of these big systems that we talk about have got like a 12 to up to 18 months through from design through to commission installation. So really disciplines around project management, timelines, communication, budget control, risk identification along the way is absolutely critical to Scott. And then the last point is sort of referring back to that global picture. We've got a lot of facilities, which shut a few of these over the last 12 months. That was pre-COVID, we were doing that anyway, just to right-size capacity. But it's really about saying, where are the centres of excellence for our technologies? What plants, for example, Europe is the centre of excellence for the warehousing systems. So how do you deploy that technology into other markets, but knowing that's the centre of excellence in Europe? Values, we're a strong value-driven organisation, and this is certainly part of the evolution of the culture, identifying with some values that are really important to us, important to me personally and my executive team and the board, and really like I say, trying to be mindful and respectful of the nuances that you get from cultural differences around the world. So our people in Czech Republic are very different from our people in Sydney, for example. So we respect those cultural differences, but we want to be operating off a consistent value set. Just some recent projects here. The Rio Tinto on the left is really large $30 million building plus robotics laboratory that's well and truly out of the ground now, so that's progressing well. Alliance is both at the primal end of cutting, $10 million sort of automation job, but also we've got a similar size automation project at their warehouse. We've got some poultry work going on in the United States with automation and robotics, and a couple of big names here that will be familiar with you, to just again to stress the size of the companies that we're dealing with and the strengths of our brand from Scott in these big sectors. So I just want to finish on just the growth opportunities which we're excited about at Scott for the future. There has been, it's well documented, increasing trends across most sectors towards automation. So, and that's been going on really over the last decade or so, driven by particularly labour availability. A lot of these companies struggle to get labour, whether that's mining companies in West Australia, meat companies down south, same with large companies in America with a change of immigration into the States. They're also dealing with big OH&S issues. These are plants that are running very high speed and have inherent people risk in them. And like I say, they're at speed, and these companies want efficiency and capacity. So some very big macro trends driving the demand for automation. On top of that, you put COVID-19, and if you read the reports about factories in America of getting shut down because of COVID, it's a very cold environment, heavily populated, 10 to 15,000 workers in each of these facilities. This has really accelerated the conversations we're having with these companies that know they've got to push along the automation curve. And some areas like meat, because of the availability of cheap labour, have been slow to adapt in areas like automation. I won't touch on all of these. Definitely the mining sector, very strong precious metal prices. Gold prices are very, very high. Big investment coming from the big mining companies around the world is good for us. The USA, big opportunity in meat, because meat is essentially being out in New Zealand, so we're pushing into America with a couple of really important sort of benchmark projects. And look, if you look at meat in New Zealand, we've got a figure here. New Zealand produces about 19 million lambs a year. Scott Technology and our systems process about 7 million of those through people like Alliance and Silver Fern. So still a big opportunity just here at our back door in New Zealand. And just to finish, because I think I'm over time, really the wrap up from me is long-term trends driving demand for automation and robotics. We're excited about our new strategy. It gives focus, it gives clarity to our people around the world about where we play and where we want to win. It's really about driving growth at affordable risk and delivering improved shareholder returns. And like I say, there has been some impact from COVID, but we are seeing increasingly markets like Europe start to open up, not just in terms of borders, but also in terms of continuing their investment programs, some of which were put on hold during the uncertainty of COVID. So look, that's a brief snapshot of Scott. I hope that's been helpful, and I'm certainly here to help with any questions now or at any other time. Thanks, James.
Thanks, John. Thanks for that really great presentation. So we have had a fair few questions, if you want to just stay on the line for a sec, John, we will endeavour just to remind everyone that to ask a question, please do so via the panel in the webinar system. So probably time for a couple of quick questions. Question here, Scott Technology is operating worldwide, and there are obviously plenty of other really big companies doing similar things. Where do you see Scott's market niche, and what is your moat?
Yeah, look, in each of our sectors, we've got good brand strength and good recognition for our capabilities and experience. So, looking like, something like appliances, those manufacturing lines, that is you could call that a niche market, but niche in terms of the people like GE and Bosch and Whirlpool and Sub-Zero. These are huge markets that we've got good, strong brand presence in. So just by focusing on that piece of that white goods market, there is a big opportunity. And that similar point goes for the mining sector and automated laboratory systems and meat in terms of cutting systems and warehousing. So it's really just about focusing on those key sectors for us that'll drive growth for the future.
Great, thanks, John. I'm looking on the second screen to see these questions. You mentioned COVID, so just a question here, have you moved past the impact of COVID, or do you see the effects of the pandemic having an ongoing effect on the business? Just to expand on that perhaps a little bit.
Yeah, it's a good question. We're dealing with COVID every day. That is, it's in several forms. It was originally in customers shutting down sites, so engineers couldn't access sites to commission technology. Now it's border controls, and if you look across the Tasman, or even if you look within New Zealand, there's border controls. But if you look across the Tasman, we're trying to move people onto projects from the East Coast into the West Coast. And that is really something that we're dealing with every day. Similar in Europe, we've got engineers selling systems and installing systems from Belgium into Turkey. Very strong border controls, managing people's safety risk around COVID. So COVID is definitely here. I think the one positive I'd say is some of the stalled decisions by boards during COVID have now started to free up. So we're starting to see investment decisions coming through in Europe, and probably for us, Europe was most impacted in terms of the big organisations sort of saying we're just going to park this investment. Now we're starting to see that free up, which is positive.
Great, thanks for that, John. There are some other questions. We're going to send those through to you directly, John, and get the answers to those of you who've asked those. But thanks, John. Thanks very much for attending this afternoon. We'll let you drop off and speak to you soon.
Yeah, nice to talk to you. Thanks.
Thanks, John. So next up, we're now going to hear from Rakon. So Rakon is, again, for those unfamiliar, is a Kiwi tech company that designs and manufactures world-leading frequency control and timing solutions. And from Rakon, I'm delighted to welcome Brent Robinson, their CEO and Managing Director. Hi, Brent. Speak to you shortly with some questions. Thank you.
Thank you very much, James, and good afternoon, everyone. I'm very happy to talk to you today about Rakon, and we'll get into the presentation. Rakon is a global leader in technology. We're a world leader in our field. We design and manufacture advanced frequency control and timing solutions. Globally, we employ about 950 people with a global manufacturing platform covering the 4 continents. And we're selling into 60 different countries. Our products generate the frequency reference needed for all communications to transmit and receive on, whether it be wired, optical, or wireless networks. Timing is a core fundamental technology. Mechanical clocks and compasses were used as far back as the early navigators on their sailing ships, who used them for location and navigation. Without accurate time, navigation would have been impossible. Today, our most accurate clocks are used to navigate ships, planes, and spaceships in the same way. All modern communications and location systems need accurate time and a stable frequency reference to work. This frequency reference is what our products generate. Quartz crystals have a natural piezoelectric property when cut correctly and put into an electronic circuit, an oscillator, can generate extremely accurate frequencies that are used to generate radio wave and derive accurate time. In radio, modern communications address a wide band of frequencies from megahertz to gigahertz. And all these are being derived from a resonating element of quartz crystal. The more accurate and the more stable the frequency, the more bandwidth that can be extracted or derived from any frequency spectrum. There's been an ever-increasing requirement for more and more bandwidth and more speed. In turn, those requirements have given Rakon the opportunity to develop more precise and more accurate products for frequency control. As the market pushes for more and more bandwidth, Rakon strives for more accuracy and more stability in its product offering. And this is what has led to our 5G product roadmap that we have today. We've been targeting tier 1 telecom equipment manufacturers. We're also targeting global positioning producers and space and defense companies. All these applications benefit from a more accurate and stable reference. Rakon was started back in the 60s, and in the 60s and 70s, we developed channel crystals for radio telephones used in boats, taxis, commercial vehicles. And these equipment had a bank of crystals for each channel. They had a transmit and a receive, so they had a whole bank of crystals that they would use to transmit and receive on. So that business was quite buoyant in the 70s. But technology had changed, started to change, and in the 80s, we could see cellular phones on the horizon. So we developed a TCXO, and these were, TCXO stands for temperature compensated crystal oscillator. So the base crystal could only reach a certain stability, and it needed temperature compensation. So we developed these, and this enabled the early cellular phones. You may remember the brick. In the 90s, Rakon pioneered TCXOs for GPS applications, and major US GPS and defense manufacturers began ordering large volumes of TCXOs from Rakon, and we soon became the golden standard in the GPS industry. I think by the mid-90s, we had about 90% of the market globally for GPS. That was going very well for us, and then we saw that the GPS was heading into the cellular phone. So we're looking for ways to diversify the business, and we also had a go at that big market, the cellular phone market. It was difficult, so we eventually focused on acquiring other businesses and diversifying into new markets. We bought a company in the UK, France, and India, and we were selling into new markets, timing for the telecommunication industry, and also space and defense, and keeping up with the industrial side of global positioning. Today, We have a 50-year trusted reputation in the world of commercial and government programs for these applications. We have established relationships with the world's biggest technology brands. I wish I could show them to you, but we're under NDA, so we're unable to do that. But we certainly supply the world's leading companies in each of those areas. We're the preferred supplier to the top tier 1 players in each of our core markets: telecommunications, global positioning, space and defence. We're enabling the lightning speed of 5G networks, providing precision positioning for autonomous vehicles and helping determine the precise orbit of satellites. Our products are at the heartbeat of today's communications and the positioning technologies. We solve difficult timing and frequency control problems. These applications exist everywhere. Since our inception, we have delivered approximately 1 billion units. We're the preferred supplier to all tier 1 telecommunication equipment suppliers. We're at the forefront of the development and have the majority share of 5G communications in base stations, radio heads, microwave and fibre optic. Cloud computing is another new market that requires precise time. Google, Amazon, Microsoft are all racing to synchronize their cloud service offerings. For financial transactions, for banks, network support for telecommunication companies, increased security and distributed processing. They're really trying to synchronize their global networks down to a microsecond. That's a millionth of a second. So they can do multiple processes in sync globally for one customer. Global positioning. Rakon is the leading and key supplier into the GNSS markets for such things as agriculture, surveying, and mining equipment. These are key markets in GPS for us these days and are under nice growth. We're also the leading supplier into location beacons. I believe we've got more than a 95% share of all emergency location beacons globally. We're enabling advancement in autonomous vehicles, and this has huge growth. From fully autonomous haulage trucks to driverless tractors, autonomous vehicles require accurate and reliable positioning technology. And these all require accurate frequency control that handle a variety of environmental conditions, especially G sensitivity, or if you hit a pothole or a bump, you don't want your car bursting off into a lamppost or something, or a tractor into a barn. So these G sensitivity is a key technology that we've got a lot of patents around. Our manufacturing plants are also already automotive certified. So as this market grows, we're in a great position to capitalise on it. In space and defence, Rakon has a long history in space and defence, particularly in Europe, growing global footprint in Japan, India and China. Rakon's products are in many applications, including large traditional space through to new space markets such as low orbit satellites. Low orbit satellites is a new space market. Traditionally, geostationary satellites were quite large, as some of them are as big as a bus. But these low orbit satellites are going to be many, and they're a lot smaller, typically around 50 to 100 kilos. Rakon's products are well suited for this, and we've been developing a killer product range for these low orbit satellites. We're in many applications as diverse as measuring the sea level or the tectonic plate movements. Rakon has a broad product offering to meet the most demanding applications. Again, we're chasing the most demanding applications in each of these niches. These are our products. They all put out a frequency output under different conditions and different specifications. From a simple crystal, XO, through to complete timing solutions, we have a diverse range of products. From low-end clocks for applications like Wi-Fi to high-end applications like geoseismic surveying from space. And these products may sell between 20 cents to 100,000 euros. Now, I think our most accurate clocks are used for the tectonic plate movement, and they are over 100,000 euros each. I think about 130,000 euros. I wish we sold more of those. If you look at where we play, we like to play at the very top end of each of the industries that we play in. So if we look at high rel, we occupy high reliability. We occupy a space there where there's specifications that no one else in the world is producing or can meet. And those are the applications where we can charge 100,000 euros an oscillator for. Further down into industrial applications, and that's all the telecom applications, industrial GPS, all sorts of communication applications, cloud synchronization, all this sits in that band. And again, we're targeting the most difficult high-end specifications that others struggle to meet, and we set the standards for. In the consumer, we still have some consumer business. At one stage, we had a large proportion of this consumer business, but we've slowly moved away from that. But there's still some consumer applications that require quite high-end specifications that we compete in. One of our key growth strategies in the future is to penetrate down each of these bands and take more market share. We believe it's easier to go down than it is to go up when it comes to difficulty factor and price. So we're doing this with our strategy with partners, and that part of our business is expected to grow in the future. If we look at our strategy, our core strategy and key focus is technology leadership. We strive to have the highest specs at the best value. We also develop highly flexible product platforms that we can address many applications and many product customers with. People is key, people leadership, and this year it's a key focus. Fast response times, we like to be responsive to our customers. And we also have partnerships with our low-cost strategy to move further down into the lower cost markets, but still leading it with our key technologies. Operational excellence is another key strategy for us. We've developed a ambidextrous strategy here where we will develop the market and seed the market from New Zealand, And as the markets mature, or from New Zealand and France, as those markets mature, we'll transfer the products into our lean manufacturing processes in India to be highly competitive. And of course, world-class quality has to be a given. So in recent years, we've demonstrated sustained growth and sustained earnings. And we have a clear strategy to capitalise on the opportunities in front of us. Thank you very much. I'll open the floor for questions.
Thanks very much, Brent, as I wait for my camera to start up again. Fantastic. We do have a number of questions, as we might expect. Again, any questions we don't get to, I will put to Brent directly offline. Couple of questions here. First of all, what are the long-term opportunities or risks for Rakon associated with decarbonising the world economy and global climate change risk management? Will this affect your product roadmap and value sweet spot in, say, 10 years' time?
Well, as the world decarbonises, obviously travel is one of the heavy burdens on the carbon world, and wireless communications and working online, and as we've seen with COVID, is going to be an important part of our future. So we've seen with COVID that there's a lot of opportunity building. It hasn't quite hit us yet, but we know it's coming with our customers. There's a lot of opportunity building with working from home, working online. This is all requiring higher bandwidth and products from Rakon. So we see a great opportunity as the world decarbonises.
Great, thanks, Brent. And then just a second, I think we've got time for one more question. Well, there's a couple of questions I can ask in one go. How much of your current sales are IP protected, and do you sell or license your IP? What percentage of revenue does this represent, if so?
Most of the products that we sell, I would say in the range of 80% are protected by our patents. That doesn't mean we don't have competitors making the same thing, but I guess the specifications they're achieving aren't as good as ours, and we certainly have a lot of patents covering our know-how. And also we do license a bit. We have licensed our technology to a Japanese company, but it does form a small part of our revenue.
Okay, great. Thanks, Brent. We're probably just about out of time, just in terms of having enough time for the final presentation. But just to thank you, Brent, once again, and to highlight that anyone who has asked a question, we will pose that directly, so you should get an answer. So thanks very much, Brent, and chat to you soon.
Thank you very much.
And moving on, thanks, Brent. And moving on to our final presentation of this afternoon from Cavalier, we have Paul Alston, their CEO. Cavalier is one of New Zealand's leading carpet and software manufacturers, and aspires to be a global leader in designing and crafting desirable, safe, sustainable, and high-performing natural interior solutions. Hi, Paul.
Hi, thanks, James. Can you hear me?
Thanks, Paul. I can hear you loud and clear. The floor is yours, and speak to you in a few minutes. Thanks.
Okay, so can everyone see my presentation here? It's
Yep. Yeah, we can.
I can't see it. That's my problem. Hold on a minute while I deal with this. I can't. James, can you help me here? That's the presentation doesn't seem to be coming online. Is that it?
We can see the presentation.
Yep.
Can you see it? Yep.
Yes, I can now. Thank you very much. So thanks everyone for giving me the opportunity to speak. At Cavalier, we've spent the last couple of years trying to, coming up with a new strategy, which some of it I'll present today. So we're all very excited about the future, and I might as well start. So just thought we've refreshed our board, and I thought I'd just introduce the board who we have. We've got our founder and one of the directors, Grant Beale. Grant Beale was around at the start. He was the starter of Cavalier, and right to the new, where we've got a new director, Paul Izzard, who is an interior designer. And we felt that having someone who's an interior designer and can talk about fashion was a really important addition to the board. And the other three directors, and George, John Ray and Diane, are experienced directors around New Zealand. So we're pretty fortunate to have a wide, diverse set of directors. As a bit of history at Cavalier, Bremworth started originally in about 1959. It was Doug Bremner started the company, and it was owned by UEB Industries, which was a big company in its day. And so the story goes that Grant Beale and his late partner, Tony Timpson, didn't get paid a bonus one year from UEB and decided to set up their own company called Cavalier. And a few years later, purchased Bremworth off UEB, so hence the formation of Cavalier Bremworth. It's gone through a number of changes. It was one of the darlings of the stock exchange years ago, with 2 to 3 dividends a year. And I guess until the world got a bit tough with the introduction of synthetics. And I guess now the focus now for us is back to what we believe we're good at, which is wool and woolen carpets, and we're dropping synthetics. So we believe the world is changing, and the time is right for us at Cavalier. Flooring and interior trends continue to evolve. So there's been a large growth in hard flooring, and that's been gaining popularity. But also, I guess the big change over the last few years has been the introduction of synthetic plastic carpet. So 20 years ago, 80% of carpet that was sold in this country would have been wool. Now that's about 15%. And that change happened very quickly, happened over a 3 to 5 year period. We believe the time is right for change, because the longer term dangers of plastics are becoming clear. You'll see that when you go to the supermarket now, you don't take a plastic bag in, you have your own little pouch bag you take in, and then the supermarkets now are getting rid of plastic bags. But I guess what people don't realise is in the average Kiwi home, you have the equivalent of 22,000 plastic bags on the floor. So you can probably go to the supermarket every day for your life and use plastic bags and still not use the amount of plastic that's on the floor. So I think there's a clear disconnect, but people are becoming more and more aware of what the impact of plastics are having on the environment. So consumers are becoming much more aware, and there is a growing concern around plastics and microplastics in our food chains, our homes, and the environment. The studies are out there showing that you eat or ingest about the size of a credit card of plastics a week, just being in your home. So the people are becoming much more aware of the impacts of plastics on yourself and the environment. And there's a massive rise in the LOHAs. That's the lifestyle of health and sustainability. This is one of the fastest growing consumer segments in the developed world. It's a wealthier demographic who focus on personal wealth, well-being, and the ecological impact. We believe at Cavalier, we're well placed to take advantage of these changes, because we believe we are the most innovative woolen carpet manufacturer in the world. And this is not just us thinking that, we are told that often. So the world is changing, and I think it's the right time for us as Cavalier to take advantage of it. So we're on a mission, as we call it here at Cavalier, to deliver a range of home experiences built with people and the planet in mind. We believe the changes we make today will prepare us for tomorrow. Particularly coming out of COVID now, that people's mindsets are changing towards the environment, health, etc. And if we try to do what we're doing, I believe 5-10 years ago, we wouldn't have been successful, but I really believe we're at the crest of a wave here. So our vision was to become a global leader in designing and creating desirable, safe, sustainable, and high-performing natural interior solutions. So not just carpet and rugs, we are looking at other opportunities out there that utilize wool or natural products. So what defines us? We do believe by embracing nature, we can make a genuine difference to the well-being of people and the planet and deliver the design performance attributes customers care about. We still have to make products which are desirable and look good, but if you add to that sustainability and the health and well-being of people and the planet, then I think it's a great platform to move forward with. So our sustainable future, we're on a journey towards becoming a more sustainable company. So what does that mean? We're exiting synthetic production, which is about half of our current volume. That's a reduction of about 2.5 million kilograms of synthetic fiber consumption per annum. And we are quite a small synthetic player, so you can only imagine the size of the synthetic stockpile that's been generated out there. Our wool carpets are made with 87% natural materials, and we are investing in scientific research to identify solutions to make our products 100% sustainable. What does that mean? We want to be able to put our carpets in landfill and dumps, and that will return back to earth. So we've got a grant from the New Zealand government, and we've working with the New Zealand Auckland University and some PhDs to look at replacing some of the primary backing and some of the glues which are not necessarily natural. So that work's underway as we speak. We are taking single-use plastics from our business, and we're going to seek new ways to reduce, recycle, and remove plastics from our products, our business, and our daily lives. We have to walk the talk here, and we believe this will benefit our business, the communities, and our planet. The studies show that companies that are focused and have a sustainable outlook are going to be more successful. So we're building on a heritage, and we think we're the best wool and carpet manufacturer in the world, and we know how to design and manufacture premium wool carpets and rugs better than anyone else. And really, when we introduced synthetics 5-6 years ago, it's a commodity. We don't make a lot of money out of it, and we should stick to our knitting, stick to something we believe we're the best at. So we're evolving to deliver desirable, safe, and sustainable and high-performing natural interior solutions. This is just not, as I said before, not going to be carpet. We're looking at other natural interior solutions that can complement the huge gap that we get when people buy carpet, which is called the 7-year gap. And that allows us to be a purpose-led, so incorporating conscious practices in all we do. So it's eco-conscious practices in all we do. So that's really the team are focused on providing natural, sustainable products in everything we do. It has to be design-led. It has to be something people want to buy. Only 5% of people buy just on a sustainability story. So we got to make sure we're designing and making things that people want to have in their homes. So our growth strategy, what are we doing to grow? So we intend to grow the wool flooring market, grow our share of that market, expand our presence, and look at innovation and future thinking. What does that actually mean, and what's our progress to date? So to grow the wool flooring market, we plan to increase the awareness of benefits of woolen products. There's a lot of myths out there about the benefits of wool versus synthetic. And no executive here in this company would buy a synthetic carpet. But I think we call wool the forgotten fiber, and we plan to go pretty hard on promoting the benefits of wool and really pointing out the concerns and the downfalls of plastic, because I think we haven't really done well as a wool industry in promoting the benefits of wool. We plan to expand our presence. So we have additional stores in Australia. Just to give you an idea of the quantum, we had quite a limited distribution in Australia. We're going to open up about 300 more stores in Australia, And to give you an idea of scale, we only deal with about 250 retail stores in New Zealand. So we're planning to open up our distribution, particularly in Australia, and there's a massive growth opportunity there. We're also investigating opportunities in China and US and the USA. We do send some carpet or sell some carpet into those markets, but we've got a grant from the NZTE, and we're looking at, which is the Trade and Enterprise, and we're looking at growing those markets. To help expand our presence, we plan to grow our share of the market, and that's rolling out our lifestyle range of carpets. Traditionally, Cavalier is seen to be sort of mid to high and out of reach of a lot of consumers. And so we've developed a lifestyle range which is uniquely designed, but a bit more affordable. And that's going to help us spread our reach across a lot more stores around the country. So we are already seeing some growth in our lifestyle carpet ranges, which we introduced late last year. And we're looking at opportunities for adjacent interior solutions, throws, rugs, and those types of things, which complement what we're already doing, and we can put the Bremworth logo on it and hopefully have a full range of offerings for people to buy. So our financial journey, what does this mean? So for this year and the next couple of years, we're investing into resetting the business. We're commencing on the new strategy and navigating the economic recovery post-COVID. We've actually come out of COVID a lot better than what I anticipated. We all thought the world was going to finish, and we pulled back production, but it seems the opposite has happened for us, and home interiors and textiles and things seem to be going through a reasonably good time at the moment. But we're still going to have to reinvest into the business. We've got a big marketing budget now, and we plan to go hard out there promoting the virtues of wool. We expect to return to adequate profitable growth in 2023, with the full benefits to be realised in around about 2025. We intend to replace the volume that we're losing from synthetics with wool, and it's going to take us 2 or 3 years to get there, we believe. And we think the wool's ready for it as well. The short-term outlook for the economy does remain uncertain, although we are seeing some positive signs, and we're already seeing, without even spending some money on some quite aggressive marketing, some switch over to wool. So that's great for us. So the economists are predicting a global uplift in the second half of 2021 as the vaccines are rolled out, and we should be well placed to take advantage of that. In 2021, we thought it would take 9 to 12 months to sell down our synthetics. We have sold them down a lot quicker than we anticipated. It's enabled us to reduce or pay down our debt, and we were getting margins better than what we expected by the sell down. I think somewhat helped by COVID and the inability of some of our competitors to get product into the country. So we're expecting our sales revenue to reduce as we exit synthetics. The top line's going to go down, but we do make better margin out of woolen products, so hopefully the growth will replace the loss in revenue in the next couple of years. And we're investing quite heavily into marketing people and resetting our manufacturing and sales base. So we've already completed the first part of a restructuring in December this year. So in terms of guidance, for the 6 months to December, we gave the market a guidance of a normalised EBITDA between $4 and $5 million. That's post IFRS 16, which is leases, and that excludes any one-off gain we get from the sale of the Auckland property and the redundancies we incurred at the end of last year, which was just circa $1 million. And it compares to a normalised EBITDA of $3 million for the last year. So we're expecting to be up on last year, even through, I guess, the COVID time. We are seeing, as I said before, some indications of positive economic activity, and we're very happy the way the year started, the calendar year, with the sales of wool. So we're expecting New Zealand woolen carpet sales to be reasonably far up on last year. And Australia, we expect to improve when supply chain disruptions reduce. We've had some issues getting stock into Australia. Some ships have bypassed New Zealand, and it's the logistics has proved to be a bit problematic, but we think we're getting over that now. So total sales will be lower than last year due to the exit of synthetics, and while we wait for new initiatives to be initiated, so we're and implemented. So we're just ready to push go on some quite some cool stuff. So we've carefully considered our strategy, and it's taken us a couple of years to get there, but it takes advantage of our strengths and consumer trends. So our strengths are that we are the best woolen carpet and rug manufacturer worldwide, and consumer trends are changing towards more natural and sustainable products. I think the timing is perfect. I really believe we're at the crest of a wave here. We don't have any bank debt. We paid all that down. We paid that down a lot sooner than what we anticipated, and we have quite a bit of cash in the bank now, given that we've sold our property in Auckland from the sale and leaseback. So we have quite a bit of big war chest to do what we need to do. We haven't had really any spare cash to spend on aggressive marketing over the last few years, and we're expecting to go pretty hard on that area. We've right-sized our organisational footprint. We had 5, 6 factories 3 or 4 years ago. We're down to really 2 or 3 now. And we've really taken out, I think, from about 1,200 staff down to about 450. So we've done a lot of work to right-size the organisation, and we're pretty well placed to springboard into the next couple of years. We are investing into R&D and focused on sustainability. That work is underway at the moment, and there's some exciting stuff coming out of the R&D. And we do have the right team with significant expertise and industry knowledge and skills. I don't believe there's anyone knows more about wool carpet than what we do. So I've kept it reasonably short here. If there's any questions, just fire them through.
Great, thanks very much, Paul. Yes, we do have a number of questions, and I hope you're okay just to stay on for 5 minutes or so. Again, to highlight that we will get all these questions across directly to Paul to get them answered. We don't have time to answer all of them, unfortunately. So just to fire through a couple over, we've got 2 questions similar here around wool availability. Will wool availability be a constraint for Cavalier's own growth and for competitors who are expected to copy the strategy if successful, and how will the company address any constraint? And similarly, will wool supply be sufficient in New Zealand to cover expected growth? So wool supply, I think.
Yes, so wool supply is not an issue at the moment. For those of you that do know that the wool prices are at all-time lows, and I think carpet industry so far in this country takes about, I'd say, 5 to 10% of the wool clip, if that. So there's plenty of capacity, wool capacity, that's not an issue. In terms of our own capacity to produce the carpet, we're actually investing currently in lifting capacity to produce wool, because we've got to have I don't want stock outs when we're starting to promote hard in terms of wool growth. So in fact, the growth is starting to happen before we've invested in extra gear and kit to actually grow. So by the end of March, we'll have increased our capacity enough to cope with any growth we think we're going to get.
Great, fantastic. Thanks, Paul. A couple here quite product specific. So what protects a Cavalier all wool carpet from carpet bug? And similarly, love wool, but how is Cavalier addressing issues of colour fastness and moth resistance? So
I'll answer the first one, bugs and moth resistance. Now, this is a big beat up that you get from retailers. Realistically, we sell 1 million broadloom meters of carpet a year, and we get 4 complaints a year on carpet beetle and moth. It's wool does have a treatment on top of it, which we give a warranty for a few years. And generally, the houses that we find have got moth or beetle problems don't vacuum their floors. So we get very little complaints. It's an issue that I think is a beat up. And yes, you might get carpet beetle on your woolen floor, but your synthetic floor will flatten and look like rubbish after 5 years. So I think it's a big beat up. The other one, what was the other question? There was carpet beetle, and I think the other one was
colour fastness. Was the other
colour
one.
fastness. Yes, that's an issue that the synthetic companies go out with and say, wool carpets don't fade. As I said before, after 5 years, it'll probably flatten and look like rubbish anyway. And in direct sunlight, their tips can burst, etc. And you'll find now that we do a treatment on wool that softens I guess the fading. But if you've got windows that are take out UV, and most people now have in their living rooms and living areas a hard flooring, and they put carpets in their bedrooms and media rooms which are not sun traps. So, you know, your synthetic carpet, my belief is that, or from what we've seen, will look terrible after 5 years and doesn't last. And wool carpet will fade gradually, but it's not necessarily in areas with direct sunlight. And if you've got UV protection through your windows, it softens that a lot more as well.
Okay, great, thanks, Paul. As I said, the other questions we do have, I will send through. Perhaps one last one. I mean, you talked about the transition away from synthetics. So a specific one here. Have you considered becoming more aggressive in your advertising so as to highlight the flammable nature of synthetic carpets versus the low flammability of wool carpets?
Yes, there's a couple other benefits I'll mention too while I'm online. So yes, we're looking to work with the New Zealand Fire Service. It's one of the initiatives we're looking at, maybe burning down 2 houses, and you can see the difference. Not only does synthetic burn faster, I think you've got from 10 to 12 more seconds to get out of your house when it's got wool. And we just had one of our wool stores burned down in Taihape of all places, and that is the whole building burnt down. The wool was still standing there. So absolutely, we're going to go reasonably hard in some of that marketing. Also, if you got pets, you got 6 times more chance of smelling a pet in a synthetic house than what you do a wool, because it's just like a woolen top versus a synthetic top. It will hold the smell. So there's a huge amount of benefits for wool, and we just need to be able to promote them and promote them more aggressively.
Great, fantastic. As said, we will send through some other questions offline, but thanks very much, Paul. Really great presentation, and speak to you again soon. And okay. With that, we'll conclude this month's webinar. Once again, thank you to all our presenters, and a special thanks to everyone in attendance. We'll be back again next month with some further issuers presenting across the to you all. But until then, wishing you a rest of a pleasant day, and speak soon. Thanks very much.
Thank you, everyone. Cheers. Bye.
Thanks, Paul. Bye.